Okay, so this is, oh, Lenny got dollar yen. Okay, cool. Let me just start dollar yen first then, since Lenny asked for it. Now the yen pairs are, okay, so if you look at the weekly chart, now this is dollar yen for you. So you can see the weekly chart of dollar yen, alright, it has simply made a series of higher highs, sorry, lower lows and lower highs. Okay, very nice downtrend on the dollar yen. Let me just delete some of the old lines here. But the reason why I say it's a nice downtrend is because from here, you see the support here that was broken. Okay, so this support here around 116 was broken. So lower low, lower high, lower low, another lower high here, another lower low here, another lower high here, another lower low here, and a potential lower high here. Okay, so weekly still in a very nice downtrend. Now, if you draw a line here, the level that we're looking out for is around the 110 level for potential lower high and the downtrend to continue. Now, let's see whether there's any support. Okay, the support was 105 where it reacted for. It touched last week and it reacted, it bounced back up. Okay, however, the trend is still down on the weekly chart. Okay, now let's take a look at the daily chart. Okay, daily chart, the trend is also down. Why? Okay, so this whole level here was consolidating here a bit. Okay, let me just take you through the price action. Oops, sorry. So we're consolidating at this whole level here. This was, I can consider this low. It made a nice breakdown, a lower low here, and then followed by a lower high. However, it made a double bottom and made a higher high. Okay, so this was a bit of a reversal of trend. However, okay, I think again this was BOJ news causing it to make a new lower low again. So the trend tried to reverse here, okay, but then when news came out, the downtrend and the weekly chart took over and it made a new lower low, which means that the momentum is still downwards. Okay, now right now I would take a look at this level here. I would pay close attention to this level here. Okay, anywhere between the 109.50 to 110. Alright, because this was previous resistance, right? Now the market has reversed itself, not surprisingly, because there's such a big glaring divergence here. You see this key lower low, however a key higher low here. So since last week, alright, it's quite obvious that there's a very strong bullish divergence. So I'm not surprised, because one of my clients, I think he traded dollar yen to the downside. He followed my price action and based on trends and things like that. And this was a pretty nice support term resistance around the 107.80 to 108. And what he did was that he actually short here, which is actually a good trade plan, because downtrend, pull back to resistance, key level, and a lower high is actually a good short there. However, he failed to see the MACD. Alright, I think divergence is very, very powerful. Alright, of course nothing is 100% in trading, but I always, because I'm a trend trader, right, I always look for divergence to make sure that there's no reversal coming up in front of me. So for this case, it's not surprising that the market pushed higher. So if you see a divergence right in front of you, even though it's a nice downtrend, obviously you do not just short directly at the next level of resistance. Most probably based on this strong bullish divergence present here, most probably it will make a bigger pullback. And that's why we are coming up to test the 109, 110 level again. Okay, so this is a key level you want to look out for. So daily and weekly chart is both on a downtrend, but this is a key level you want to look out for at around the 109.50 to 110. Alright, whether it will come down to make a new low, I'm not sure, but if you are entering in at a good level, chances are at least there's some pips to be made here. So it's still a downtrend. It's still a downtrend, but whether they want to make a new low, can't tell yet. Can't tell yet. Okay. Look at the weekly chart again. Okay, the weekly chart is still in a very clear downtrend. Right now, we're just waiting for the moving averages, which is acting as a form of dynamic resistance, to catch up and see whether they can push back down to 106, 105. Okay, but daily chart, this we are near the area, anywhere between 109.50 to 110. because the daily, look at the daily moving average is still pushing downwards nicely. Okay, so just pay attention to those levels and see what happens and see whether the shorter term chart start changing to the downside. Alright, Lenny, is that enough? Is that alright for the dollar yen? And since we are talking about dollar yen, right, I want to show you a very nice trade last week. It's been relatively good trading past 2 weeks for me, and really nice trends out there. So just pay attention to this. So this is quite similar to dollar yen, but I was last week I was thinking whether to trade dollar yen or Swiss yen, and then I picked Swiss yen. Now, the reason why I picked Swiss yen is because, okay, look at this level here. Okay, look at this level here, the 112. This was a very, when I was doing my market scan, right, and I saw this weekly candle close below the key support 112 area, I was so excited. You can see how nice the downtrend is here. You see the moving average is crossing downwards. You can see a series of lower low, lower highs, beautiful downtrend, okay? And the 112 level here is so obvious. It's so obvious, all right? Even Stevie Wonder can see it, all right? Because if you see support, 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 weekly candle close below support, which means it's a break, nice little pullback with a bearish candle, and then it came down further, okay? Now, right now, there's a bit of a bullish candle pullback, but we are pulling back to the 112 area again. So I'm quite keen to see what's gonna happen there at 112. Okay, but the downtrend is still firmly intact. Okay, I'm already out of the trade. Okay, so this was the where was it? This was the pullback. Let me see if I can find it. Yeah, this was the pullback to 112. So that 112 level which I drew is somewhere here. Yep. So this was a classic downtrend. Look at that. Lower low, lower high, lower low again. Okay, so obviously this big reversal, I'm just staying on the sidelines, but I'm very keen to see what happens at this 112 area to see whether it's rejected or not. Okay, chances are we might make a push downwards from here. Okay, or we might just consolidate. Okay, so I just brought up Swiss yen because we're talking about yens. Alright, let's move on. Alvin, you're still here. Okay, let's talk about your pound kiwi then. Okay, but if you are very familiar with weekly and daily charts, trust me, when you see a really nice support or resistance broken on these time frames, right, that's where you need to start planning your trade. Number one, ask yourself, okay, uptrend, downtrend, what level was broken? Number two, if you identify a downtrend, for example, you look out for, okay, where's the resistance that I want to take it down from? Okay, where's the level it wants to pull back from? Okay, and then start planning a trade. Okay, and then once you have the trade plan in mind, then you start going to lower time frame, to your 4-hour chart, your 1-hour chart, and then you try to wait for confirmation before you jump into the trade. Okay, but once you have this process ingrained, it's just rinse and repeat every single week. Okay, of course, there's some weeks whereby the market is really constipated, there are no trends, then you just got to be a bit more patient. Okay, Alvin, pound kiwi. Let's start from the weekly chart. Okay, weekly chart is downtrend, but testing a key resistance. Key resistance is 215. Okay, let me delete all these stupid lines here. Okay, it has made a spiked up. Not surprising considering that it's reacting off all this support area here. But 215 is a key resistance that is testing right now. Okay, not much of a trend, I would say. Right now it's a bit more consolidating the weekly chart. Daily chart is a different story. Daily chart has reversed itself to the upside. Okay, so 215, where's the 215 level? Okay, so that is the key resistance level to look out for, 215. There's not much to do, honestly, Alvin, now, because what do you think of kiwi since the uptrend channel is broken and pound kiwi is reaching strong? Okay, now in terms of kiwi, right? I mean, I take it a pair. I take different pairs separately. So, for example, kiwi yen. If you see the trade idea that was sent out by my marketing site this morning, I was looking at kiwi yen to short. However, it's not broken that 73 area. Later, I'll bring it out again. But pound kiwi, right? Pound kiwi. If kiwi is going to be weak, most probably pound kiwi will be strong. Now the daily is on a nice uptrend already. Higher low, higher high, and another higher high. Okay, but normally when the level is going to break, especially in the key resistance level, right, how it's going to break is that it will come down again, collect more buyers at this support level here, and then slowly move its way up and finally break it. Okay, so I'm not that keen on this resistance level. Will I go short? No, because it's against the trend. Okay, so it's trying hard to reverse itself, but unless 215 breaks, I'm not that convinced too long. I will let it come down to a nicer level of support, maybe around back to 212 or 213 area, and then from there I try to take it up again. Okay, but are you bullish or bearish on this, Alvin? If you are still here, are you bullish or bearish on the pound kiwi? Because right now 215 is really a key level. There's definitely no more meat for you to go long. So even though the trend is bullish, right? There's not much meat. You gotta be patient. I would rather let it retrace back to the 212 area. So that's pound kiwi for you. I'll cover kiwi yen as well. So I'll take it individually. So if pound kiwi breaks 215, which means that the yen is very weak, then most probably my trade idea that was sent out this morning to you guys through my marketing team, most probably the kiwi yen that I was eyeing will have broken that key support. So if you look at the weekly chart, right? Okay, the reason why I like this chart so much is because if you draw a line here around this 73 or so, you can see that now the break is not as clear. Okay, the previous support was around the, let's see, yeah, around the 74.50 area or so. So it is inch lower, but then it make a big pullback. But so it's not the cleanest of breakout to the downside, but you can see if you compare all the highs, right? You can see that it's making subsequent lower highs, lower highs, lower highs. Momentum of the moving averages is still pushing downwards. Okay, and once we break a key low of 73, all right, I tell you the momentum will just push it downwards. Okay, we just push it downwards. All right. So the next level of support, if the downtrend is going to happen, will be around the 69 to 70. So there's a lot of pips to be made here. But what I want to see is a clear break below 73 before I do anything. Because right now, I'm just a bit more cautious. Because you notice the behavior of it. Every time, yes, it did make a new low. Like for this case here, it broke below the 74. But then the whole thing just shot back up. So I want a key break below the 73 before I'm convinced on joining the downtrend. Alright, but it's a heads up there for Kiwi yen. Something really interesting to look out for. Okay. Alvin, you're saying pound looks bearish against dollar but not against commodities. Yes, you're right. I think it's because it's related to oil. I mean, the commodity currencies are always related to oil. So oil has been quite weak for this week or so. That's why you can see that the commodity side of things, the currencies are also slightly weaker. As a technical trader yourself, do you refer to the dollar and euro indexes to guide you on the trade? Yep, definitely. I mean, I don't have the dollar index on the on my charts here, but it's good to always cross-reference the dollar index. So for example, if you are trading euro dollar, for example, if you're bullish on the euro dollar, that means you want the dollar to be weak. But however, when you cross-reference the dollar index and you see a dollar index testing a key support level, then you got to try to, be a bit more careful of your trade plan. All right, be a bit more careful in trade plan. So let me just draw this out because it might be a bit confusing with just talking about it. So for example, if let's say euro dollar is pushing higher, okay, and this is euro dollar, okay, so it's on uptrend, and you want to buy euro dollar because which means that you want euro to be strong and dollar to be weak. But however, when you cross-reference to DX, right, okay, the dollar index is testing a key support. So obviously, when testing key support, if you want to buy up the euro dollar, you need the dollar to be weak, but the dollar is testing key support on the dollar index. Then chances are we might, even though the euro dollar is an uptrend, chances are it might make a slight retracement down, then you will take it up from here. Because that's where maybe the DX will start drifting higher and then it will start coming down. Because when you buy euro dollar, essentially you want the USD to be weak, correct? So when you cross reference DX, Alright, if the DX is falling, then yes, the trade plan is more likely to work. But if the DX is support, then it might take a bit some time to sort itself out. Okay, it's all about timing. It helps to cross-reference. For example, you can use dollar index, you can use euro pound, you can use a lot of these cross currencies to try to cross-reference it. But for those of you who are new to trading, please don't do that first. Okay, you confuse yourself. Okay, there's something called analysis paralysis, whereby you analyze so many different charts and then you get scared, and then in the end you don't even take any single trade. Okay, so for those who are new to trading, don't do that. But for those of you who are like Alvin, I assume I traded for some time, yes, you can use different indices to cross-reference to your trade. Okay, it's just about helping you time when to go in and things like that. It helps. It definitely helps. Of course, you can't be 100% accurate, but it helps in terms of relativity. All right. Did I answer your question, Alvin? Okay. Currently, Euro index is consolidating, but dollar index is turning bullish, but Fed is dovish. How do you look at it? Now, okay, let's not bring fundamentals to it, because fundamental is really 50-50. Okay, seriously, the amount of analysts having differing views every single day on television is crazy. I'm just sitting below the Bloomberg TV every single day, right? And one day they say that the Fed will hike rates in March. The other day they say it hike rates in June. Now HSBC, for example, came up to say that the rate hikes will only come in September, December. All right, so fundamental for me is really, there's no point looking too much into it, because at the end of the day, it's really hard to predict. It's almost like a 50-50 kind of thing. So if you say the euro index consolidating but dollar index is turning bullish, yeah, sorry, Alvin, when you say euro index, you mean just the euro by itself, right? Is that what you mean by euro index, or are you talking about the DAX and CAC and things like that, or these euro stocks? So the euro by itself. Okay, since we are, or the index, as in like the DAX. Okay, so if you look at the euro dollar, for example, right? Okay, you can see that let me see what you're saying. The euro index conservative dollar index turning bullish. Yep. So I mean, what your analysis is not is in line with how the euro dollar is moving actually. So because look, if you see euro dollar, right, very big bearish pin candle, and you notice that this level here around the 114.50 to 115, every time when it tries to break, right, it fails. How many times there's so-called break only for the candle to form a very big bearish pin candles or long shadow? Alright, so obviously there are a lot of sellers near the 114.50 to 115 area. And you can see the whole thing now turning towards the downside. Alright, so if you look at the daily chart, so you can see that it's still an uptrend. There might be this is euro dollar, by the way, there might be a push higher from here, but based on a weekly big bearish pink candle, chances are we are coming downwards. Okay, but right now the weekly and daily is telling two different stories, because if you look at the daily chart, it still looks slightly bullish, but the weekly chart is a cause of concern. So I'll be very careful if you're still looking to buy euro dollar at the moment, just because how the bearish pink candle looks here. See how many times this level forms bearish pink candles? It just shows that there's a lot of sellers over there. Alright, so just be a bit careful. For euro dollar, I'm staying on the sidelines for now, just because I just want to see how it pans out on the weekly chart and daily chart first. Okay. Sunil, you said that Kiwi dollar has a divergence. Where is it? Oh yeah. So sorry, Alvin. So for example, euro dollar, right? So let's say if I'm bullish on the daily chart. Okay, let's say if I want to be bullish on the daily chart and is near the support levels right now, near the 113.50 to 114 level. Okay, I need the DX, the dollar index, to be testing resistance. Okay, and then from there, hopefully my trade will go up. Okay, but I'm just using dollar index as a reference point. That's all. All right. So that's euro dollar for you. Now, Sunil, you say euro yen. There's a bullish divergence on the daily. Let's see. So Kiwi yen. Where's the bullish divergence on the daily chart? I don't see any bullish divergence. Sunil, sorry, are you there, Sunil? Daily chart, right? Yeah, looking at daily chart, I don't see any bullish divergence. Yeah, if you are there, Sunil, just feel free to help me out here, because I don't see any bullish divergence on the daily chart for Kiwi yen. Oh, the 1 hour you mean? Let's see. Bullish divergence. No, I don't see any bullish divergence here as well. Alvin, you're talking about Kiwi yen, right? So I'm a bit confused here. You talking about Kiwi yen or Euro dollar, Alvin? Oh, Kiwi yen. Don't see any bullish divergence. Both are forming higher lows in the Kiwi yen on this. Yep, I don't see any bullish divergence on the 1 hour as well. Okay, but the Kiwi, I'm just waiting for it to break 73. Then I'll be excited. If it lingers around here, I'm not getting bothered too much about it. Okay. All right. So any other currency pairs that you want me to cover? If not, I'll do a very quick one on commodities, and then I need to wrap it up for the evening already. Dollar CAD. Okay, dollar CAD. Okay, dollar CAD is one of those tricky examples which I mentioned in the beginning of the webinar, whereby it's a nice downtrend and the news caused it to make a spike up, and then you're scratching your head wondering whether the downtrend is still valid or not. Okay, so if you look at the weekly chart, right, weekly chart is definitely on a clear downtrend. You can see that it just made one big push down, lower low, and right now it's potentially forming a lower high around the level of where we are right now, anywhere about near the 1.3 level. Okay, that is definitely a resistance level to look out for, 1.3, but weekly is in a downtrend. Now looking at the daily chart, alright, not surprisingly, you see the 1.3 level here. That's a resistance level to look out for. So let me draw the push line down here. Okay, I personally would not touch the dollar yen Lenny, because like I said in my example in the beginning of the webinar, it's one of those cases whereby the trend was really nice, down, 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 and then the news caused it to spike higher. So I'm not too sure sentiment-wise who's in charge, whether the technical side of things or the fundamental side of things. Okay, but what I know that 1.3 is a resistance level, so I expect a reaction here, maybe back to the previous support at around the 1.28 or so. Okay, but I'm going to be a bit more cautious because the weekly is still in a downtrend. Daily has made a big spike up like that. Alright, but this area here, if you see weakness near the 1.3 on the 4-hour, 1-hour chart, let's see whether there's any weakness there on the 1.3. Not yet. Okay, you see the 4-hour chart just making a push all the way. But 1.3 is a key level. I would say that if you want to trade dollar CAD for now, or say keep it short term, in the 1.3 is expected and you see some kind of resistance, maybe you can take it down to 1.28 or so. Okay, because whether the daily chart or the weekly chart is in charge, I'm not sure anymore, because the daily chart has made a big spike up. So for all you know, it might come down to test this support here around 1.8 and then it might push higher. Okay, but then the weekly chart is in downtrend. Okay, weekly chart looks like a very nice downtrend. Okay, so it's in 2 months now, so just be a bit careful. Alright, so I mean, I don't want to try to force a trade plan if I'm unsure. So this is one of those examples when the news came in. If there's no news, dollar CAD downtrend all the way, very nicely downtrend. You can see a daily chart. It's just simple trading, just usually lower low, lower high, lower low, lower high, and it's a heaven for trend traders. Okay, especially if you use price action. But right now, the spike is a bit tricky. But keep a key level, keep a key eye, and look at 1.3. Okay, if you want to take it from 1.3, that's a good level of resistance to look out for. If it breaks below the 1.27, 1.28, then it might come and test the lows again. Okay, but keep your eye on the 1.3 level. But be very careful on this. Okay, Lenny? Okay, Raju, so Euro Pound, the last one. Let's do Euro Pound. Okay. So Euro Pound, you see the market has been still on an uptrend on the weekly chart. No divergence, really nice uptrend, higher low, higher highs, and things like that. Okay. Support to look up for is around the 77.50 level, still supported. Okay, it's nice uptrend. Let's see whether there's any resistance. Okay, the resistance is not that strong. In fact, the strong resistance is around the 81.80 to 82, which we have not touched yet. So there's a chance that we might push higher to 81.50 to 82 in the near future. Okay, but weekly definitely on uptrend. Daily chart is a bit different. Daily chart, I would say, is consolidating. Okay, you can see the support is here. Resistance is here. Let me just delete some lines. Okay, key level to look out for daily chart is around the 79, I'll say 79.30, 79.40 level. If this level breaks, then there's a high chance that we might go to the previous high. Okay, but I'll be very careful in trying to buy anywhere here because it's consolidating. For all you know, it might just drift back down to the support level at around the 77.50 area. Okay, so what I'm looking out for if you're bullish is you want to wait for the 79.30 area to break first, and then you can take it up to the previous highs and hopefully target the 81.50 or so. Let's go to 4-hour chart. Okay, so if you see the 4-hour chart, the level that I want it to break is the 79.30 level, which is here. Okay, it's also a bit consolidating, but I'm looking out for the 79.30 to break upwards before taking higher. Okay, because for all you know, if this support breaks, we might be coming back and consolidate back downwards. Okay, right now there's a bit of a bullish divergence based on the MACD. Okay, but not the cleanest one yet. So my trade plan, if you're bullish, is to wait to break the 79.30. If you're bearish, then let it break the 70, go to 4-hour chart. Let it break the 78.60 or so, and then maybe it will come back down to the previous low. Okay, but just take note of the slight bullish divergence right on the 4-hour chart. Alright, Raju, is that okay for you? Okay, if not, thank you so much for coming by for today's session on Market Talk. Again, the session will be recorded. If you're not sure of price action or how to, analyze, feel free to ask questions and come by the webinar because there's nothing like learning on the live markets. Okay, if not, happy trading, everyone. Always remember to plan the trade and trade the plan. I'll see you in 2 weeks' time. Take care. Thanks, Lenny. Thanks for coming. Take care.